Hello, everyone. Welcome to the market opening bell on September 15th, Monday, your 10-minute guide to the stock market. The market is watching this week's Federal Reserve meeting with the three major U.S. stock indexes showing mixed performance last Friday. The Dow Jones Industrial Average retreated from highs, closing down 273 points or 0.6% at 45,834. The S&P 500 index also closed down 3 points at 6,584, driven by Tesla rising over 7%. The Nasdaq rose 98 points or 0.4% to 22,141, setting a new closing record high. The Nasdaq China Golden Dragon Index, which reflects Chinese concept stocks, fell 9 points or 0.1% to 8,378. For the full week, the S&P 500 rose 1.6%. The Dow rose 1% and the Nasdaq rose 2%. Major tech stocks generally performed well. Tesla followed Thursday's 6% gain with an even stronger rise on Friday, closing up 7.4% as the company's chairman said Musk is refocusing on his duties. Apple rose 1.8% with its new iPhone Air delayed for launch in China. Microsoft rose 1.8%. Meta and Nvidia rose less than 1%. According to reports, Nvidia plans to scale back further development of its cloud computing business. It will no longer focus on encouraging other companies to use its DGX cloud service, instead using it for internal research operations, including the design of new semiconductors and the conceptualization of artificial intelligence tools that can drive chips. Supermicro Computer announced that it has begun shipping large quantities of NVIDIA Blackwell Ultra systems and data center plug-and-play solutions to global customers, driving its stock up 2.4%. The company stated that it is currently delivering NVIDIA HGX B300 systems and NVIDIA GB300 NVL72, which are pre-validated solutions designed for rapid deployment at the system, rack, and data center levels, primarily for large-scale AI training, real-time inference, and deduction. Oracle stock continued to decline, falling 0.5% on Friday, with a cumulative drop of over 10% over two consecutive days. Analysts are concerned that Oracle's revenue is almost entirely from OpenAI, leading to a significant reduction in enthusiasm for Oracle orders. BioNTech and Moderna both fell over 7% as U.S. officials plan to attribute 25 child deaths to the COVID-19 vaccine. Cryptocurrency exchange Gemini Space Station debuted on the New York Stock Exchange on Friday, opening at $37.01 per share, up 32% from its IPO price of $28. The IPO raised approximately 425 million US dollars by selling about 15.2 million Class A shares. After listing, the company's valuation is about $4.4 billion. On the economic data front, the University of Michigan's September Consumer Confidence Index fell to 55.4, below August 58 and the market expectation of 58, marking the second consecutive monthly decline and reaching the lowest level since May, with the most significant drops among low-income and middle-income households. Meanwhile, one-year inflation expectations remain stable at 4.8%, while five-year expectations rose for the second consecutive month from 3.5% to 3.9%. Hong Kong stocks opened higher last Friday, with the Hang Seng Index opening up 453 points and reaching a high of 26,586, a four-year high, up as much as 500 points before gains narrowed, closing at 26,388, up 302 points or 1.2%. The H-share index rose 105 points or 1.1% to 9,365. The Hang Seng Tech Index rose 100 points or 1.7% to 5,989. The total market turnover for the day was 320.7 billion Hong Kong dollars. For the week, the Hang Seng rose 970 points or 3.8%. The share index rose 3.4%. The tech index rose 5.3%. Southbound funds net bought 7.331 billion Hong Kong dollars in Hong Kong stocks last Friday. Among them, net buys included Alibaba at 4.38 billion, Tencent at 929 million, Popmart at 642 million, Hua Hong Semiconductor at 401 million, Akasol at 225 million, and Transthera Sciences at 180 million. Net sales included Meituan at 1.682 billion, 3S Bao at 294 million, UBTech at 228 million, and Bilibili at 138 million. According to statistics, southbound funds have net bought Alibaba for 16 consecutive days, totaling $41.523 billion, and net sold Meituan for 4 consecutive days, totaling 2.709 billion. Technically, the Hang Seng once touched the 26,500 target, with further upside targets at 26,800 and 27,100, and downside support at 26,200 and 25,800. The three major Asia indexes collectively retreated last Friday, with the Shanghai Composite closing at 3,870, down 5 points or 0.1%. The Shenzhen Component closing at 12,924, down 55 points or 0.4%. The Chinex closed at 3,020, down 33 points or 1.1%. The combined turnover of Shanghai and Shenzhen markets was 2.5209 trillion yuan, up 83.3 billion yuan from the previous day. For the full week, the Shanghai Composite rose 1.5%. The Shenzhen Component rose about 2.7%, both reversing the previous week's decline. The Chinex rose 2.1%, marking 6 consecutive weeks of gains. The People's Bank of China announced over the weekend that new renminbi loans for the first 8 months of the year total 13.46 trillion yuan. Based on PBOC data, August alone added 589.1 billion yuan, reversing July's loan contraction, but the increase was below the market expectation of 700.9 billion yuan and down 34.676% from the same period last year, with new loans from households and enterprises both lower than last year. Among them, household loans were 30.3 billion yuan, including short-term loans affected by consumption at 10.5 billion yuan and medium to long-term loans reflecting mortgages at 20 billion yuan, both below last year's 71.6 billion and 120 billion yuan. Corporate loans were 590 billion yuan, less than last year's 840 billion, with medium to long-term loans at 470 billion, similar to last year. Bill financing was 53.1 billion yuan, for far less than last year's 545.1 billion yuan. The loan structure shows that both corporate and household demand remain weak. However, state media Securities Times pointed out that about 1.9 trillion yuan in special bonds were issued in the first 8 months to provide funds for resolving local hidden debt, which to some extent slowed credit growth in the short term. It also noted that RMB loan balances grew 6.8% year-on-year at the end of August, and excluding the special bond replacement factor, loan growth would be about 7.8%, which is still a relatively high level. On the social financing front, the PBOC announced a social financing increment of 26.56 trillion yuan for the first 8 months, calculating August alone at 2.57 trillion yuan, above the market expectation of 2.5 trillion, but about 15% less than last year's 3.03 trillion. Continuing the trend since the second quarter, social financing increments are still mainly from government bond net financing at 1.37 trillion yuan in August, with renminbi loans to the real economy at 620 billion. As of the end of August, bought money M2 balances grew 8.8% year-on-year, above the market expectation of 8.6%, while M1 money balances grew 6% year-on-year, in line with market expectations. The high M2 growth reflects strong financial support for the real economy. In recent years, financing channels for the real economy have diversified, with the proportion of direct financing such as corporate bonds, government bonds, and domestic equity financing by non-financial enterprises steadily increasing, making social financing scale and M2 growth more comprehensive in reflecting total finance than new loans. Today, China will release three carriages economic data. August year-on-year industrial added value for enterprises above designated size is forecasted to rise 5.6%, previous 5.7%. August year-on-year total retail sales of consumer goods is forecasted to rise 3.8% versus previous 3.7%. Year-on-year urban fixed asset investment for the first 8 months is forecasted to rise 1.5% versus previous first 7 months 1.6%. National real estate development investment for the first 8 months is forecasted to fall 12.5% versus previous first 7 months, which fell 12%. August survey urban unemployment rate is forecasted at 5.2%, previous also 5.2%. Additionally, Chinese Vice President Premier He Lifeng will lead the delegation to Spain from September 14 to 17 for talks with the US side, where both parties will discuss trade issues such as tariff measures, abuse of export controls, and TikTok. The renminbi US dollar central parity rate was reported at 7.1019, up 15 pips from the previous day's 7.1034. In Hong Kong stock trading, it's reported that Alibaba and Baidu are using their own AI chips to train models. Baidu reached an intraday high of 119.7 dollars, up as much as 12.4%, closing at $115.1, up over 8%. Alibaba reached an intraday high of $153.8, up as much as 7.3%, closing at $151.1, up 5.4%. Alibaba began using its chips to train smaller models earlier this year, using the Zhenwu processing unit, while Baidu is still experimenting with its internally designed Kunlun P800 chip to upgrade its ERNIE model. Another piece of news from Alibaba is that its Zhongyi Tianwen team released the next generation based model architecture, Qwen 3 Next, with training costs reduced by over 90%. Compared to the dense model Qwen 3 32B, long text inference throughput increased by more than 10 times, and support for over a million tokens in ultra-long contexts. Meituan stock continued to hit the new yearly low of $95.35 as its first AI agent product, Xiaomei app, began public testing. Mainland media reports position it as a small and beautiful AI life secretary that can provide personalized services such as takeout ordering, restaurant recommendations, and reservation navigation through simple natural language instructions. Xiaomei is powered by Meituan's earlier release self-developed model, Longcat Flash Chat, and the app is available on major app stores with users able to participate in the public beta via exclusive invitation codes periodically distributed through official accounts. Pharmaceutical stocks stabilized after declines on the news front. The National Medical Products Administration proposed to further optimize the review and approval process for innovative drug clinical trials. For eligible innovative drug clinical trial applications, the review and approval will be completed within 30 working days after acceptance. This pathway supports national key R&D varieties, encourages global early synchronized R&D and international multi-center clinical trials, and serves clinical urgencies and national pharmaceutical industry development. Our store pick today is HutchMed, stock code 0013. HutchMed announced that it will hold a conference in Shanghai, China on October 31st to 5 Friday to share the latest R&D progress. The company's executive vice president, head of R&D, and chief medical officer, Dr. Michael Shi, will share the company's R&D strategy and vision, including an overview of the company's antibody targeted therapy conjugates (ATTC) platform with a focus on its first candidate drug HMPL 8251, as well as the latest developments in its late-stage R&D pipeline. According to its interim financial report, candidate drugs from the new ATTC platform have been selected, with plans to initiate Chinese and global clinical trials for the first ATTC candidate drug by the end of 2025, followed by submissions in 2026 for multiple global new drug clinical trial applications for additional ATTC candidates to enter clinical development. According to the instruction, the next generation ATTC technology platform fully leverages the company's accumulated expertise over more than 20 years in targeted therapies and small molecule inhibitors. By connecting a monoclonal antibody at one end with a proprietary targeted small molecule inhibitor SMI payload at the other, the ATTC platform has the potential to create a rich pipeline of candidate drugs covering a wide range of tumor indications, including precision therapies for specific disease subtypes, compared to traditional antibody drug conjugates and for or small molecule drugs. These ATTC candidates have key potential advantages, namely enhancing efficacy through synergistic combinations of antibodies and small molecule targeted drugs, which will target specific genetic mutations and overcome resistance to existing treatments, offering higher safety and longer treatment durations. Compared to small molecules, ATTC drugs have lower toxicity to non-tumor tissues or off-target toxicity compared to traditional cytotoxic conjugates. They have a lower risk of bone marrow suppression, which can improve treatment safety. Optimize pharmacokinetic characteristics to address the challenge of difficult drug targets. Compared to oral small molecule inhibitors, antibody-guided targeted delivery improves bioavailability and reduces drug interactions. Advantages over existing antibody-drug conjugates due to the lower toxicity of SMI payloads to non-tumor tissues and the release via lysosomal cleavage within target cells. They can target tumor cell-specific mutation-driven signaling pathways. They can also be combined with existing standard treatments such as chemotherapy and immunotherapy to enhance efficacy. Potential for first-line applications: chemo-free ATTCs are expected to support combinations with other targeted therapies, chemotherapy, and immunotherapy in earlier line patient populations, offering broad market potential. The group will prudently and actively allocate resources to accelerate the development of a series of candidate drugs from the innovative ATTC platform, including simultaneous clinical development in China and overseas. This will enrich the company's product pipeline and create more collaboration opportunities Recommended buy price 27 Hong Kong dollars. Target $30. Stop loss $25.5. I do not hold the aforementioned stock.